Modest move to the upside. We're being led higher by global industrials and global technology stocks. These are cyclical stocks that move here. If you put that up here, and the important thing is there's your energy stocks a little bit weaker, but industrials, banks, consumer staples doing a little bit better. Mentioned semiconductors also on the upside. Yesterday was a teaching moment for the markets and for all of us to be reminded of what a broader trade war would look like. Not just tariffs, but a lot broader than that. Take a look at the S&P futures. This is just extraordinary. 6 a.m. to 6 p.m. yesterday, the futures moved in a 120-point range. 120 points on a S&P, not the Dow. This is probably a 3 standard deviation move, meaning it's outside of 99.7% of all normal trading patterns. And there's the bottom that we hit. Of course, that was when they were declared a currency manipulator. We started moving up after they started stabilizing the yuan earlier in the evening. And then, of course, they said made more positive comments. And here we are at the highs for the day. But the important point is 120-point move in the futures. No, you just do not see that very often. And it's a reminder what the trade wars could really look like. We tend to think that tariffs are the trade wars. No, they could be a lot broader than that. Trade wars have a lot of different facets. It includes customs wars, which are what we call the tariffs right now, but can also include currency. And this is what freaked out the markets. It began to realize, oh, this could be a lot bigger than just tariffs. Then you could have other things. You can have other kinds of economic sanctions or sanctions on individual companies. It can get very complicated. In history, there's been even more serious things. There's been physical blockades that have occurred in trade wars. There's even been actual wars. So this could get out of hand very quickly. And the market kind of moved to remind us all about how complicated this can be. I think that's very important. If you take a look at the people who argue that it's just $300 billion and we have 10% of $300 billion in tariffs, it's $30 billion, it doesn't really mean that much. Well, it's not just a number. It's psychological effects, and then you have capital expenditure issues. This gets really complicated, and you can't put a number on it. I made a bit of a joke about the food stocks being down 2% yesterday. That's a sign when Kroger is down almost 2%. It's a sign that they're taking down exposure. They're not just reducing industrials. They're taking exposure down to the overall market, and that's a sign here that you've got a problem when people don't want to involve themselves in simple things like food stocks. You can see this sort of mix today. So the market took down a multiple on the overall stock market yesterday. If this keeps going, if things get more complicated, they're going to start taking down earnings numbers. They already have, essentially. We've been pointing this out. Put up the second quarter earnings estimates now. All the big cyclical sectors had negative numbers for the second quarter. Materials, energy, industrials, technology, all down compared to the second quarter of last year. These numbers, with the possible exception of industrials, they're all down again for the third quarter. That's because they've slowly been taking down the estimates. The hope here is that this year will be flattish. That's the word I've been using for a couple months now. That's the bull scenario. But if this gets more complicated, if that currency war gets even worse, these numbers for the third and fourth quarter, they're going to get even worse. They're going to go way into negative territory. And that's the threat the market essentially made yesterday. We're not seeing wholesale reductions in Q3 and Q4 and 2020 numbers yet, but that will happen if this gets a lot worse. As for where we are volatility-wise, we hit close to 24, close to 25 yesterday in the VIX. So that certainly was a little bit of a warning sign. But remember, we've been a lot worse. We were way above 30 in December. And back February of last year, of 2018, I think everybody remember, we hit 50 at one point. So, yes, there was some panic there, but it certainly wasn't off the charts kinds of panic.